HMRC has finally made paying the high income child benefit charge a bit less painful. You can now do it in real time through PAYE instead of wrestling with self-assessment. My name is Robin Moore and welcome back to this week's episode of Tax Tidbits, where the new service launched in September means if you earn over £60,000 and get child benefit, you can pay the charge as you go, like a Netflix subscription you never wanted, rather than at the end of the year. This applies to employees who have no other reason to complete a tax return. You'll need to deregister from self-assessment first and have a few details handy when you access the new service, like your partner's national insurance number and any changes in your relationship status. Yes, HMRC wants to know everything. Once you're signed up, your tax code should update within a couple of days, and the system should even adjust automatically for new kids or older ones finishing school. Overall, it should be a simpler, smoother way to deal with high-income child benefit that saves time, paperwork, and possibly a few headaches. QuickBooks is giving its UK platform a major facelift, rolling out a new slick interface that's supposedly faster, cleaner, and sets the stage for a wave of new built-in AI assistants. Think fewer clicks, cleaner screens, and way less "where on earth is that button" frustration. But the real headline is the incoming army of AI agents. These are digital assistants that can categorise expenses, stop dodgy transactions, prep your reports, and even nudge you about potential leads. It's all part of Intuit's plan to merge tools like MailChimp and customer relationship management features into one tidy system that takes you from first lead to final payment without leaving QuickBooks. Now, the true impact of these features is yet to be seen. Users have been able to test the new interface since last August, so if you're a fan or if you can't stand it, let us know in the comments. So Royal Mail is in the headlines again. Have any of you got any guesses for why? Well, they've again been hit by a fine from Ofcom, this time to the tune of £21 million after nearly a quarter of first-class posts turned up late last year. Ofcom slammed the company for repeated failures, pointing out that only 77% of first class and 92.5% of second class mail made it on time, compared to the required 93% and 98.5%. It's the third fine in a row for Royal Mail, and Ofcom warned more could be coming unless they actually improve rather than just promise to. Royal Mail says it's working on it, including cutting Saturday second-class deliveries in some areas to focus on the quality of service. As you may know, these failings are impacting businesses that rely on Royal Mail for postage, so if you've got any customers complaining of late deliveries, feel free to send them this video as an explanation. The IMF predicts that the UK will be the second fastest growing G7 economy this year, despite modest growth of just 1.3%. Though we are likely to be near the bottom of the pile on the per person basis. Additionally, inflation is set to be the highest among G7 nations this year and next year, driven by rising energy and utility costs, before easing towards the 2% target by the end of 2026. Chancellor Rachel Reeves has admitted the economy feels stuck for many, which is probably why people aren't exactly celebrating. Other G7 economies, including Germany, France and Italy, are expected to grow more slowly, with only America ahead of us on the tables. Overall, the UK is weathering global turbulence better than most peers, but households will still feel the pinch from high prices. Millions of households in England face even higher water bills after the Competition and Markets Authority approved small extra increases for 5 water companies: Anglian, Northumbrian, Southern, Wessex and South East, on top of rises already set by Ofwat. The average hike works out around £12 a year, so roughly £1 a month, and has been approved partly because loans for infrastructure upgrades have gotten more expensive. The companies wanted much bigger rises to actually fund infrastructure improvements, but the CMA wasn't having it and approved only a fraction of what they asked for, and stressed that most of the bigger increases were unjustified. The extra costs will strain households even further. so make sure to amend your budget if your supplier is affected. That's it for this week's episode of Tax Tidbits. Hit subscribe so you don't miss next week's updates, and we will see you then.